Welcome and thank you for your interest in G2G Investments, where it's not about how much you invest, but how much you keep. Earlier this year, I shared my story of what brought me back into the hobby of collecting Pokemon cards after over a decade. I told about my emotional experiences, but I was very careful to leave out the more unfamiliar experiences of investing into the stock market and how I was able to relate the stock market to the Pokemon collectible market that I was learning about. Right now, we're unpacking a series called How to Invest in Pokemon, where we establish a foundation of prioritizing our finances first so that we can keep our investments for the long term. This is an opportunity for us to revisit my story and reveal the analytics in my stock market investments and the part that they played in shaping my desire to take the Pokemon market seriously. My hope is that unfamiliar concepts become easier to grasp as you grow in your awareness to investing. I'll prepare you now. This is going to be a more logical, analytical breakdown of events. And as the story grows, it'll become more clear and complete as we approach it from other angles. So we're going to take it back a little further this time. We're going to go back to 2009 because that is the year that I first started to invest into the stock market. Just to set the stage, we had the Great Recession of 2007, 2008. And as I come into 2009, from just looking at the stock market history, take note that the stock market would have been at the bottom or very close to the bottom. And that would be my entry point. And I bring that up, and the reason we're coming back to 2009 is going to be to say that I'm going to experience 10 years of growth, more or less double-digit growth year over year, and a lot of success in my investing. And I'm not really going to know a time of recession or volatility. My experience with the stock market is going to be one direction, everything going well. I invested consistently, and by 2015 and 2016, in both of those years, I was contributing 10% of my annual income into the stock market. So 2015, 10% of my annual income went to the stock market. 2016, 10% of my income also went into my retirement account, which is in the stock market. And I was doing so well, again, just receiving those year over year profits, that in 2017, I stopped contributing altogether and I took the whole year off. My intention and my focus that year was to rein in all of my debt and spending. So I was on a budget, more or less consistent, not that consistent, but I was serious about getting my debt paid off. I had about $7,500 in revolving credit card debt that I needed to get behind me, and I was pretty eager to get that paid off so I can continue to build my wealth over time. In 2018, I would start up investing again as the year turned around into 2018. But I would also begin learning and investing in individual brokerage accounts. So personally, I have after-tax money that is in brokerage accounts like Robinhood, Stash, and M1 Finance. And I started to experience a lot at the latter part of 2018. But in the meantime, I was learning about the stock market, investing into the stock market, and wanting to do something on the side and just kind of learn as I go. And so I'm doing that, getting on with it, and I started noticing the market started to take a big turn in October of 2018. And again, if you line up the timeline with my story, I was looking into Pokemon Go at about June of 2018. I sent my cards to be submitted to be graded through Luckins Collectibles in August and September. And then while my cards are out in October, the market took a big hit. The market got crushed. Billions of dollars of wealth was just evaporated and swallowed up in just a matter of days. And that would continue for the entire month of October. So for the first time in my investing experience, I'm watching things fall apart. I'm watching values go down. I'm watching balances. I'm watching losses. Everything that you can imagine is going on. And because it's my first experience, I'm very panicked. Even though I feel like I know a little bit about the long term, it was definitely different when you're looking at your balances go down. And I started to think really hard about what I should do going forward. Because October was a hit and it didn't stop. November also, there were even records that were set. History was created in December, where on Christmas Eve the market dropped the single most amount it had dropped in a long time. I should have got the stats prepared for you guys. I apologize. And then the following business day, on the day after Christmas, December 26th, we had the biggest reversal that we had seen in the history of the stock market. Something just craziness going on. And through all that volatility, I was looking for answers. I was researching, listening to people that I had listened to throughout the whole year, and just looking for alternative things that I can do with my investment, because I didn't want to be necessarily have all this exposure to the stock market, especially considering that people were talking about the United States needing to correct and go into a recession. And I'm in banking, and so we were in a rising interest rate market, and there's a lot of other information I was gleaning from my work experience, and everything's pointing to, things aren't going to stay up forever if things go the way that they should go, which is they need to correct. But the Federal Reserve was not allowing that to happen. That's where you get into quantitative easing and all this other stuff that's going on. But I'm following a circle of people that are basically understanding that there is going to be a point in time where the stock market's going to correct, and we were instructed to build cash reserves in order to be able to enter the market if something like that should happen and an opportunity should arise. So people were doing different things. Some people were investing into the emerging markets like China due to the trade wars. They were being hit for the last all throughout the year. The United States was only affected in about October, and so some people were diversifying their portfolio by buying stocks in Chinese companies, and others were moving their wealth into gold and silver and cryptocurrency. Just a lot going on. Me personally, I took an opportunity to shift around my investments. I wouldn't finally pull the trigger on that until January of 2019, where I'd get out of different positions in my 401k and just kind of redistribute my investments in a different way. But before that, what I was doing was I was already investing into my individual brokerage accounts. I sold those investments, and I started researching a handful of individual Chinese stocks that I wanted to get into. So these stocks, I believed, through the research I was doing, had potential, and if we should see the stock market take a dip, my idea was that at some point, these stocks are being heavily influenced by the news about the trade wars, and that if these companies are proven, then they can see some growth. So I played with that. I got it out of all of my positions and ended up in three individual stocks, and I just was in it for the long term. I didn't have a problem just making that kind of a move. Well, again, November, December came about. a lot of stuff was going on, and in January I made some moves in my 401k just to be a little bit more diversified than I had been previously. So what would end up happening is about February of this year, sometime around the beginning of the month. And I don't have the dates, and I do apologize. It's really me trying to recap from memory, but it was the early part of this year that the position that I was in on my individual brokerage account, the Robinhood position that I was in, this stock started climbing significantly, and people started becoming aware of it. I was at the time building my position into that stock, and I had something around 24 shares. And by the time things started to grow, I was watching it closely and using analytics tools or I'm sorry, strategies that I am aware of from day trading and from swing trading, and just kind of following different people loosely and trying to understand what's going on. One concept I had learned about was just the general information about the stock market, which is that there's usually comprised of your bears and your bulls. You have people that are bearish or that are thinking that the stock market will go down, or that a particular stock will go down. People that are bullish and they think that they're optimistic and think that a particular stock will go up, or the stock market overall will go up. Well, when you're talking about individual stocks, you have the same thing. And when you're watching your individual stocks, there's one thing where you're researching your companies and you're looking at the analytics and the financial statements, and you're following the quarterly calls, the monthly calls, and you're doing your due diligence by following the company closely. But there's a whole other side of it, and that first side is something I'm a little more familiar with. That's what I do on my side. I deal with businesses all the time. I look at financial statements in my own business and in my company that I work for, and I give an account for the financials for my location on a monthly and quarterly basis. So that stuff was easier to follow, but the stock stuff is the analytics and the tools that you use to understand the stock market. That stuff was a little different. That was something that I'm learning as I'm going. Well, one thing that I had learned is about, again, bears and bulls, and how different price points would be tested or retested, and different patterns can emerge based on that data. It's called analytics. When you look at the analytics, you get things like trend lines, and you're following daily movements, hourly movements every 30 minutes. And when you're looking at this data, you can start to put together a narrative. You can see how much volume is going in on a stock. You can track and kind of get familiar with the average volume. And there's also the Robinhood app that helps you with that as well, where they give you different data points that you can get familiarize yourself with. So in my case, I am watching my stock and learning about it, but then also just kind of keeping an eye on it. And I noticed that it's rising. When I entered into this position, it was a little bit above its 52-week low. And then at the time, it really got my attention when it really started jumping. It's going to be somewhere in between its 52-week low and its 52-week high price. And so I was aware of a news story, like some kind of coverage that was going on that was causing the stock to rise. And at that time, I was building my position. I wasn't fully in my position, and so I was seeing profit, but I was still actively trying to build my position into it. And so I had a decision to make. Prices were going up on the stock, and I knew why. And I wanted to, maximize that opportunity. But at the same time, I wasn't in position. I was still building my position. So my options were, I can hold and just let my 24 shares grow and do nothing. I could be a little more aggressive, and I can take money out of savings and build my position further. Or I could sell. I could just choose to sell and be like, well, you know what? The market's changing. I have to adapt. Why don't I just sell my 24 shares? And I didn't necessarily time it, because I was trying to get in on my position. Now my position's up, and I'm just going to sell instead of buying while the prices are increasing. So I considered all those things, and what I was waiting for before I made a decision is I was giving it time. I wanted it to breathe. I wanted to kind of get my data going. But what I was doing is I was looking to see if a certain price point that it had gone to in the past, if that price point would hold, or if it would, and that's called being supported. If that price point would be supported, or if it would get resistance. So that concept is where you're analyzing an individual stock, and you're noticing a trend line. You're noticing a trend where it would get to a certain price, and then people would either sell or they would buy. They would rally, and depending on that data, you would you would be watching for a change. Is it gonna are people gonna sell again at that price when it gets up to that price? Or are the bulls going to rally and get together and try to push past it and break through that price? Because if they do, then a lot of people that do the analytics are going to jump on board, and they're going to change their mind. Like the bears will become bulls, and they'll try to ride that wave up. So this is very common in day trading and swing trading, and I was aware of that, and so I was waiting to see if it would get to that price point and then what it would do. So it finally got to that price point, and at this point, I'm up 40% on my investment. And this is all in a shorter amount of time because people are doing this stuff actively. They're in there. And so now I'm up 40%, and I waited, I think a day or a couple hours. I can't remember if it was the same day or if it was the next day when it increased. But I wanted to wait. It was right away. It was actually right away. I waited for it to get to that price point, but then I waited like an hour. I just gave it a little time to breathe before I decided to make my move. And what I did is I liquidated the other two positions that I had in my Robinhood account because I was in 3 individual stocks. I added some funds from my account to my balance, and I tripled my position. And I went from 24 shares to buying like 60 something shares, and I think I ended up at like having 100 shares, which is the position, my starting point of what I wanted to build into. I ended up just jumping in there and paying the higher price, believing that the price would continue to go up. So I just rushed my position. Well, the next day, it fell below that same price point, and I was like, I couldn't handle it. I was like, I did all my research, I did all my analytics, I'm looking at this stuff, and I'm seeing that I've made a calculated decision, but that it reversed on me, and I don't know where I went wrong. But now I'm like, I don't like what I'm seeing. What I'm seeing. I was anticipating it to get closer to its 52-week high, and then make a new decision based on that. Maybe continue to grow my position or just reassess. But the very next day, the price drops. People were selling off, and I knew that's what they were doing. People were giving up on the stock and just dumping. So I had to wait. I didn't sell. I waited because I'm still long term on this stock, and it was just very uncomfortable having to wait in a situation like that where I had made a move. Well, it took about 2 weeks, but eventually, 2 weeks later, the price would it would fluctuate, and then it would get back to being where it should be. I'm sorry, the price point that I purchased it at. And it was at that time that I made a decision that I didn't like what I was experiencing. I didn't like the difference. And so I made a decision that that because it got back to that price point, that I would just call it, and I would just sell my entire position and lock in the profits that I had, and then just be grateful that I didn't lose more, and that I had an opportunity to sell at about even for that new entry point where I had bought the 60 shares and I tripled my position. So I did that, and no joke, I would go on to watch this thing fall. I sold at the perfect time because this stock would just fall. It would fall past the point of my entry where I started building my position, and it would fall another 30%. I think 30%. It would fall another about, or not 30%. What am I saying? I think like 20% after that. And I just waited. I had cash reserves at that point in time. I just watched it for a while, and when it broke lower, it went to a new 52-week low, and I didn't decide to get in at that point. So I didn't know what was going on. But then I would decide sometime later to get into that stock again, because it seemed like people were settling down, and the people that had made moves to kind of push that stock up, it didn't seem like they were too much interested in the stock anymore. So it felt like I can get back to business as usual. So what I did is I took all those profits and I bought in at the lower end, lower than I had started. This is like a huge opportunity where now it was like I was able to make a decision to cash out, and then I was able to get back into position, and I was able to, instead of going back to 24 shares, I was able to start at that initial 100 shares with all the profit that I made, and I'm buying at a lower entry point. So it ended up being this huge success, but at the same time, I didn't like all the volatility, and I was really uncomfortable, and I was really nervous about even taking this new position. But I did, and I'm still building my position in there. I'm up to over 200 shares in that position, and as of today, and there's a lot of nuggets that we can get into regarding this market, this experience that I had. But what I want to communicate for now is that all of that experience in that field is what cemented, once I got those cards back with PSA, the way I explained in the Luckins collectible review video and just in my story, the emotional attachment to those cards it was just crazy, because I was experiencing all these crazy things on my own individual investments where you're making decisions. How many decisions did I have to make, and how much data did I have to look at just to keep up with what I was able to do? And I got really lucky and unlucky, and it was just so much going on. But I ended up coming out ahead, but not because with Pokemon, it seems like the market's just growing. It doesn't seem like people are really in it, investing in it the way that as aggressive that it is in the actual stock market. The amount of work it requires and the amount of luck just to be right and to make money. A lot of people do it better than me, but I'm not those people. I'm just, this guy out here trying to make it happen. And so what I'm saying is, when I looked at Pokemon and I could see that there could be a potential to invest, I'd rather have 100 cards than 100 shares. And yes, I'm still continuing on my individual investment on that side. I mean, I'm doing well. But what I'm saying is, these cards took on life for me, and it became an opportunity that I hadn't really ever considered. I was actually considering to sell my cards when I got them back. I wasn't really decided. That's something I didn't share, but I had initially pulled the trigger on getting my cards graded with the possibility of wanting to sell them so that I can increase my positions in my individual stocks. And so here I was with the numbers and with all the data and with all the experiences, and now it was like, well, why don't I just hold? I'm not hurting for anything, I'm in a good place. Maybe I can grow into this Pokemon side and at the same time continue on in my individual investment side, and that was my decision. So I did. I didn't sell any of my cards. I just decided that I would have a different approach about it. And you guys are going to get more of that. Our next video is the revelation video, and we're going to talk about how to use the same style of analytics that I'm familiar with in investing in individual stocks, and we're going to apply that to Pokemon. And that's what we're getting to. We're getting to the revelation video, just to kind of give you guys an idea, let you know what I'm talking about. We're going to do this little guy right here. I have spreadsheets going. I have different sets that I'm trying to understand, and this is part of the research. And when we get into this, little sneak peek, but when we get into the revelation video, we'll be able to unpack concepts of focusing your investment, researching your investment, and it's going to be spreadsheets like this and some of the tools that are out there that we'll use to do an in-depth narrative analysis on at least the first edition base set to start, and then continuing on in our future, we'll talk more about the different sets and how they correlate with the first edition base set. So this is just a sneak peek for something for you guys to get excited about. I do want to share that in-depth experience just to get you guys excited about what's to come. But before I let you go, you should know that G2G Investments stands for Greed to Generosity. So if you're standing on the side of greed today and you want more content, then subscribe because more is coming. But if you resonate with the things that I'm talking about and you like the approach that I'm taking and the direction that this channel is going, and you're standing on the side of generosity, then go ahead and leave a like for the video. That gives me feedback, and it also gets some exposure out there. But get in the comment section and give some feedback. You know, let me know what's on your mind, what you're thinking. There's so much that we can experience together in between videos. I'm always actively looking in the comments, waiting for you guys to show up. And there's a lot that we can talk about in between time. And the last thing I'll mention is that the Discord community is in the description. So if you wanted to jump in there and take a look at some Discord first look videos, there's some videos in there that are just posted exclusively on the Discord channel, and that can give you a head start on some more content that you might not be aware of. All right, I'll leave it at that, you guys. You guys take care, be safe. I'll be talking to you guys and checking in on you guys soon in the comments. If you should need anything, just reach out. There's so much that we can talk about and strategize about. If you have any similar successes in investing in individual stocks, or you want to jump in there and mention some of what you've seen that's been going on, please feel free to get in there. We could talk about the Pokemon market. We could talk about the stock market. It's just whatever you guys are into. All right. Until then, you guys take care, be safe, and I'll see you soon.